All right, so if you're a dividend investor, but you're wanting to get to your dividend goals faster, I'm going to show you a few strategies today that potentially can help you speed that up. If you are wanting to expand things, these are things you can definitely look into and do some more research and find out how you can apply them to your investment strategy. Thanks for joining me today on Discovering My Dividends. I hope you'll follow along in the video so you can see how it is that I'm going to help you with finding different strategies or different ways of looking at your portfolio to maybe help you grow it faster. Let's go take a look. All right, so here we are. We're talking about dividends. And so essentially, if you are wanting to get into dividends, you're buying dividend stocks and you're going to get somewhere between 1 and 7%. It can be lower than 1%, it can be higher than 7%, but let's just say that that is the range. Typically, your stronger stocks that you want to hold on, like say if you are looking for the ones that are considered like the king of the kings kind of thing, you're probably going to get like a 3 to 4%, so slightly above in what inflation is usually at 2%, so you're going to do slightly more than that. Now here's the thing, getting a dividend stock is going to increase the number in your portfolio quite a bit slower than if you had other strategies. So a lot of people shy away from dividends, and people say dividends are a bad way to go about building a portfolio. Now, if you have lots of cash, you might want to just dump it in and say, I'm going to do dividends. I'm going to live off, so I don't really care. So I'm just going to let it go in here and I'm going to build it. That's fine. But if you have very little and you're starting with very little, how do you grow it faster? Well, these are some of the areas that I've come across, and now I'm not an advisor, so definitely you want to find your own strategy and find out what works best for you. But these are some ways that I think might help you with your dividend portfolio. And this is kind of things I'm looking for. So when I do look for growth stocks, and they're not all going to be growth stocks when you're talking about dividends, but some of them still, they might only pay this 1%. And they're going to focus on overall upward growth. And what you are hoping is that the company or whoever's managing the company is going to have a plan for that growth to make up for the fact they're only paying you 1%. So you're getting more out of the dividend stock at the end than it's worth now, and at a rate that's going to pay you out greater than inflation, and have substantial growth for your overall money that you've invested, right? So growth stocks are definitely important there. Now, a growth strategy is, like I said, I think a little bit harder based on what I've researched. And growth stocks can tend to be, I think, sometimes overpriced. So you definitely have to know what you're doing there. Not necessarily someplace to jump in and just go, okay, I'm going to follow the herd. But, you know, you're obviously investing on your own because you want to make your own decisions. So I think following the herd is probably not what you want to do. Now, value stocks, this is where Warren Buffett would jump in, where he's looking for a stock that has this potential value, but it's down here. So he's looking at a stock that's dropped in value. He thinks it's worth this much, and so he wants to buy it down at this price. So he's looking for basically a sale on what the stock is, and for whatever reason the market's dropped that price. Now there might have been some events, some things in the economy, some world events, so on and so forth, that knocked the price down. Investors jumped out, the price came down. Now you have an opportunity to jump in and hopefully make up this extra little bit of value. So when I'm looking at a value stock, for my personal self, I'm looking at trying to make about a 20% gain or more in a short period of time, and then I'm possibly going to swing trade it, right? Now, value stock, if I can get it cheaper, I do want to hold on to it a long time. So I'm out of my 100 shares, let's say I have 100 shares, I'm going to sell 20 of those shares on a swing trade. So I'm not going to sell everything because I bought a value stock that I think is less valued less than it is. I want to hold it as a dividend stock, and hopefully it's paying out at a higher rate. Now, if it's not paying at a higher rate, I'll probably change this 20 to a higher number because I want dividend for more turnover. And if I get more than 20% turnover in a very short period of time, and on swing trading, like say 3 to 6 weeks, and I've made 20% or more, yes, definitely. And if it's more than 20%, I'm going to look at probably maybe even selling it all the way, especially if that value stock went past what I think is valued at. So if it went up here and gained an extra 20%, say, or 10 or 20%, I'm definitely now looking at this as a swing trade, and I might be selling upward to maybe 50 shares out of 100. Right, so swing trading and value trading, I think, kind of go hand in hand, because I'm going to be looking for value stocks that I want to hold for a long period of time, ones that I'm going to get on sale. But if I have an opportunity to swing trade them because they go overvalued, I might be looking at selling off some of them and then looking for another value buy, another stock that has potentially dropped below at a certain point, but I'm going to bring back some of that cash flow, and I'm going to use swing trading to kind of get me some extra growth, which is what we want to do to hopefully build up our dividend portfolio faster, right? Now, another thing you can do is sell options, and selling options allows you to sell and get some cash. So basically, you're giving somebody else the option to, at the beginning, you don't hold the shares, you're giving them the option to sell you the shares, right? So you're selling them the option to sell you the shares when they want to get rid of them, or at a certain price point. And at that price point, you're obligated to buy them, but you've already determined, if I'm buying value stocks at this price, I'm okay with that price. If it dips a little bit below, that's fine. I got paid extra here, so I'm automatically going to do that. And having that option to sell brings in extra cash flow for you. So I want that to go towards my dividend portfolio. I want the cash flow so I can then apply that to more value stocks. And if I do it with an option, I get the extra cash. Okay, so I've already determined I'm willing to buy at this price. If I set the option for it, and then I am willing to buy in here regardless of where that price goes, because I believe this is already undervalued, and therefore wherever it goes to after I buy it, I still believe it's coming back to this point. So the options just give me an extra cash flow. So I'm getting extra cash, right? Extra. Nothing wrong with that. Now, if I'm holding the stock, I can sell an option to sell those stocks at a certain price. So if I'm okay with holding this value stock now, and this is the best part of it for me, is if I hold this value stock and it stays in here, that's fine. But I can sell an option for this price because I'm willing to sell it here, because that's an extra 20% or whatever it is, whatever that number is I determine that I'm willing to get rid of them for. Now, options, they're set up a little bit different, so make sure you understand how they work before you go get into them. But if I already hold the shares and I sell an option to sell my shares to somebody where somebody can buy them from me, and I set it at that higher price, I've now just made myself an extra 30 to 40% on my portfolio, and I've got that extra cash flow I can now apply to another value stock that I think is undervalued, and I can go in and make that extra purchase. Plus, I've made that extra portion, extra cash off the sale at this night. Because if I'm going to sell at this price anyway, and someone's willing to pay me for the option of being able to buy those shares at that price, even if it goes higher, I was going to sell at that price anyway. It doesn't matter. I just got paid extra money to do it, which means doing options sell either on a put or a call is like a fantastic way to add extra money to your cash flow for your dividend portfolio, which in my case, I'm going to be primarily looking at value stocks, but I will be still looking at some growth stocks. I've even put a little bit into some stocks that I don't even know if they would be considered growth yet. They're more speculative. I do have a little side of about, what do I got? About 5% of my portfolio is set up with that, stocks that I think might have a little bit of a potential future kickstart. I've kind of gone with EV batteries and, of course, the nitrogen, because Toyota's back to the nitrogen side of it. And, of course, Toyota's the largest vehicle manufacturer, car manufacturer in the world. And if they're going to back it, there must be something to it. But anyways, I got a couple of companies that are into both of those sides, which I think if we ever get past using fuel, those companies are going to take off. So I've done my own speculation. You can do speculation in there, but if you're looking at dividend stocks, they're just an extra, and they're taking away from your dividend portfolio as far as I'm concerned. So I wouldn't necessarily use that as part of your dividend strategy if you want to be a dividend. But that's kind of how I do. About 5% of my portfolio is just totally outside of my regular strategy, which is number one, I'm going for dividend stocks. Occasionally, I'd say maybe 20% are growth stocks where I'm not buying and selling them, so I'm not putting them in this swing trading area. But any value stock that I buy that I'm buying at a lesser value has a potential for a swing trade, in my opinion. So that is probably, I'm looking, I'm guessing that's about 75% of my portfolio is value stocks that I am looking at swing trading. And so it's a large portion of it. They don't all swing trade, but I am still looking at that potential if I can get that extra bit. And if I think they've overpriced themselves, I'm definitely going to jump out and get that profit. And option selling, if I am buying more than 100 shares, I'm doing an option on it, right? So whichever broker you're working with, you might want to find out if the options is available to you, and most likely it is. But then check out how you can set up options for yourself. Do not do an options buy or sell until you know what you're doing, because you can have an infinite amount of loss with options. Maybe you can experiment, but I would recommend it. If you have lots of money and you have a potential to lose a ton of money, like your entire savings or retirement fund, definitely know what you're doing with options before you do it, and make sure you double check each sale before you do it, because it is risky. Okay, so like I said, I'm not an advisor, so any of these things that I've shown you here are really just my own perspective on setting up a dividend portfolio. I hope that this will give you some ideas to think about and how you want to strategize with your dividend portfolio. But definitely, whatever you do end up doing, make sure you have a good solid strategy and understand how it is you are going to be setting up your portfolio. Thanks for joining me. Hope you have a great day. See you next time.